I think their goal is to take yields down in the U.S. We've seen members of the administration talk about how the metric by which they should be judged this term is not the equity markets, it should be the bond markets. And so what that tells us is that they're looking for the Federal Reserve to see this economic uncertainty coming and maybe economic weakness, like when we see potential weak GDP numbers. We saw the Atlanta Federal Reserve GDP Now number come down over the course of a month from expectations of 4% GDP growth to expectations of negative 3% GDP growth. We think it's likely that the administration is trying to push on the bond market in order to refinance the $9 trillion of US federal debt that comes due this year. That's going to be a big step that they want to take towards reducing the deficit. I'm not one that thinks they're playing 3D chess or anything like that, but I do think that it's one of the only things that makes sense to me when you look at the actions they've taken over the last little while. And if you ask me, try to tank the economy, and I was king for a day, that's what I would do. I would increase economic and policy uncertainty. I would slash government spending. That seems like it's the case.